Jai Hind friends, in today's video we are going to review a portfolio. We will talk about the companies which is there in the portfolio. Then in the end I will give my views on the portfolio, that what I would have done if this would have been my portfolio. So let's start. So investor is currently working in a private concern and has been invested in stock market for past 3 years. And he's saying that over this period he has frequently reshuffled his portfolio, and after much consideration and doing a lot of analysis he has created this portfolio. And his strategy is neither to have a concentrated portfolio nor to have a over diversified portfolio. So he plans to keep maximum 30 stocks in his core portfolio. And here he has asked me to review the portfolio and what would be my suggestions. So let's start with the review. So total invested amount is 25,64,000. Total number of companies in the portfolio is 28. Current value of the portfolio is around 34,06,000, and the profit is around 8 lakh, which is around 32% on the total invested amount. So we don't know over the period of 3 years how much he has invested on regular basis. So we cannot say or think that this 32% is his 3 years return. I'm assuming he has been continuously adding more capital into his portfolio over the period of 3 years. So the return looks decent. So first company is Apar Industries. Number of shares are 10. Invested amount is 76,000. And on this he is currently sitting on a profit of 31%. So this company is a market leader in India with a global presence, and it is into the business of manufacturing power transmission cables, transformers, conductors. So it's a okay company, I would say, although it's a market leader, but it is into a sector which is related to power, which is not very consistent in my view. But till the time it is giving good growth and good profit, you can stay invested in this company. Next company is APL Apollo Tubes. Quantity is 67. Invested amount is 1 lakh, and currently there is a profit of around 3.67%. This also is a good company. It is into the business of manufacturing stainless steel pipes and tubes. This is also kind of a leader in its sector. So this also, I think you can continue with this company. Nothing wrong with this. Next is Astral. Quantity is 83. Invested amount is 1,29,000, and currently sitting at a profit of around 17%. So Astral from last few years is not giving such great return, although this company is also a leader in the piping sector, plastic pipe area. So, but I think this we should stay invested in this company as well. And right now also I believe it's the good opportunity, because in next year I believe the demand will come back, and now the RBI has also cut the CRR rate by 50 basis point, which will increase the liquidity. The capex also will start, and then eventually the rate will also get cut. So next year I'm thinking the demand will also come back and these companies should start doing good again. So I think you can stay invested in this company as well. Next company is Bajaj Auto, and quantity is 9. Investor amount is 85,000. Currently there is a loss of around 6%. So this industry, which is an auto industry, it's very cyclical in nature. So you have to be very careful when you are entering and when you are exiting. It's not an industry where you can make consistently good return over the period of time. So this is one sector which I generally avoid, but this is my view. If this would have been my portfolio, I would have stayed away from these auto sector, auto related companies. Next is Bajaj Finance. Quantity is 19. Invested amount is 1,23,000, and currently there is a profit of 5.23%. This again is a leader in NBFC sector. Nothing wrong with this company. From the last 2-3 years, again it has also not given that much great return. But I think if your horizon is long term, this will give decent return in the longer period as well, because the credit requirement in India is still going to grow at a very good rate. And next year again, I believe this company should do well. But let's see how things go. But nothing wrong fundamentally with the company management and their business. So you can stay invested in this company. Next company is CAMS. Quantity is 29. Invested amount is 82,000, and currently you are sitting at a profit of 83%, which is very good. This also again is kind of a cyclical in nature, this kind of industry, because this relates to the broking industry, which is the stock market industry, which we can say whenever you'll see a bull market or a trend wherein Nifty is going up, you will see these companies perform well, because that is the time where more retail investors will come in, they will buy more mutual funds and all those things, and that is when these companies will also again start doing well. Whenever the stock market will show a correction, it will go into a stagnant phase, then in these companies also you will see that the growth will kind of stop or will become stagnant. So again, in this case, your choice. If you can deal with those period of 2-3 years where the stock will not do anything, then you can stay invested. And it happens with, I think, almost every sector. If you keep increasing your horizon, then eventually, if it is an average company also, it will start giving you good returns. If your horizon extends from 5 to 10 years, then an average company will also make you very good return. Next company is Kaplan Point. This is from the pharma sector. Quantity is 60. Investor amount is 84. and currently there is a good profit of 69%. So this company is also decent in terms of growth, return on equity, and the return also on stock price, it has given a decent one. So this also is a good company, you can stay invested for long term. Next, we have CDSL, quantity is 45, investment amount is 62,000, and profit is around 33%. So it's a similar kind of view like what I had on CAMS. So CAMS, CDSL, or any brokerage company like Angel One, all these belong to the similar kind of sector and will move in a similar way in terms of chart pattern as well. Next company is Credit Access. Quantity is 95, investment amount is 1,21,000. Currently, there is a loss of 26%. So if I look at the financial of the company, there is nothing wrong with the financial. It's a NBFC in microfinance and a leader in that area. But if you look at the chart is only going towards south from past few months. And the reason is because for the entire NBFC sector, there has been a re-rating, and especially with these small NBFCs, although they are growing at a good rate, their share price is not growing in that direction. And the reason is because there is a kind of a bubble in this area. The market is predicting that there will be a lot of NPAs into this area. That is the reason that you are seeing that the share prices are not going, even though the company is showing growth. But right now things looks risky in this area. We don't know which small NBFC will go down because of the increase in NPAs. So that's why this has become a risky area as of now. Next company is Dr. Reddy's from pharma sector. Quantity is 70, investment amount is 84. Currently there is a profit of 3%. So for this company, although it is from a pharma sector, but ultimately the share market rewards growth. And growth, if you look in this company, is not that great. It is like in lower double digits or sometimes in single digits as well. So you can take a call. You want to stick with this kind of a growing company, or you want to look for a company which is growing at a rate which is kind of about 20%, because that is where the actual money will get made. Next company is Gravita. Quantity is 40, investment amount is 86,000, and it is giving a profit of around 2% as of now. This is also one of the leaders. So in this portfolio, what we are seeing is mostly leader, which is always a good strategy to have. If you look at this company is one of the largest lead producers in India, and in the last few years, it has given a very, very exceptional run up. Whether that run up will continue or not, it will again depend on its growth. So we'll have to monitor its quarterly numbers, whether it is increasing its sales or not, or whether it is going down. In case if it is going down, then you can also see a correction in this company. So now we'll increase the speed a little bit, otherwise it will become a very long video. So next company is HCL Tech. Quantity is 50, investment amount is 67,000, currently at a profit of 42%. This is a good company, definitely you can keep it in your portfolio. It's from the IT sector, and compared to the other big giants, it is growing at a very good rate. So a good company to have in the portfolio. Next is Hindustan Unilever. Quantity is 40, investment amount is 99,000, and no loss, no profit situation right now. This I would avoid because there is no growth in this company. So this is one company which I would have avoided. But again, it's your portfolio, you should take the call. This is just my view which I'm telling you. Next is Hyundai. Investment amount is 1 lakh, and currently no profit, no loss situation. Again, from auto sector, as I told you, it's very difficult to get consistent return from the auto sector, according to me. So I would have avoided this company as well. Next is ICICI Bank. Quantity is 100, investment amount is 1,16,000. Profit is around 15%. Again, a good bank growing at a very good rate. You can definitely keep it from the banking sector. Next is a ETF, which is ITBs. Quantity is 2,500, investment amount is 92,000. Currently at a profit of 30%. So in ETF, you can stay invested if you want to bet on a sector, and if you don't want to go with individual stock, then you can go ahead with the sector as well. Next is Keynes Technologies. Quantity is 17, investment amount is 54,000, and profit is around 95%. So this also is a growing company. You can stay invested in this company. Next, you have again from the IT sector, which is KPIT Tech. Quantity is 110, investment amount is 91,000, profit is around 80%. This also is a good company from the IT sector, growing at a good rate. You can stay invested. Next is Quantity 100, Max Healthcare from the healthcare sector. Investment amount is 75k, profit is 45. With this also, I think you can stay because healthcare sector is doing good in India right now, and also I think it will continue to do good over a longer period of time. So you can stay invested either in Max Health or Apollo Hospital. Both are good companies. Then we have NetWeb. Quantity is 20, investment amount is 51,000. Profit is around 11%. This again is from the IT sector, a small company which is growing at a good rate. You can keep it. Next, you have Newgen. Quantity is 100, investment amount is 1 lakh. Profit is around 29%. This is a software company which provides software workflows to different companies for their day-to-day operations. This also is growing at a good rate, a good company to have. You can keep it. But what I can see is that there are a lot of IT companies also, and we have taken ITBs, ETF also. So you can think about it, what you want to do. You want to go with individual IT stocks, or you want to go with ETF. Next, you have PI Industry. Investment amount is 1,18,000, quantity is 34. Profit is around 18%. Again, a good company, one of the leader in its sector, so you can continue. Then you have Polycab, quantity 41, invested 1,19,000. Profit is very good, 151%. Again, a leader in the wires and cable sector. You can definitely continue with this for the long term. Next is Reliance, quantity 60, investor amount is 77,000. Profit is around 2%. Reliance again is one company which I would avoid because it's a huge company now. And for this large company to grow at a very good rate in double digits, it becomes very difficult. If I would have been you, I would have avoided this company. I would have invested in something else. Next is Supreme Industry, quantity is 10, investor amount is 47. No profit, no loss situation. This is from the plastic sector. This also is fine. You can stay invested with it. Next is Tata Elxsi, quantity is 20, investor amount is 1,31. Profit is around 12%. This also is a good company, but you might have to play long term with it because the growth that it was showing earlier, that has kind of come down. So let's see, stay invested. I don't see anything wrong with the business and fundamental. You can stay invested. Next is Uno Minda from the auto ancillary sector. Investor amount is 92,000, quantity is 145, profit is 71. This also is one of the good company growing at a good rate. So auto ancillary is one area where you can, I think, invest in my view instead of investing directly in auto, because there I think you will get good returns. And it happens with almost major sectors. Like if you take the substitute, like for reality sector, in reality sector, if you invest, you will hardly make good profit on a consistent basis. But if you select shares which are kind of its substitutes, like which are companies which get business when the reality sectors goes up, which is like paints, wires and cable, pipe sector, all those things, those are the areas where you can make consistent profit. Next is BBL, quantity is 322, investor amount is 85,000, and profit is 139%. This again a good company from the FMCG sector growing at a very good rate. I think this also you can go long term. Okay, so this brings us to the end of the portfolio review. Now, if we look at the companies are mostly good, fundamentally good companies is what we can see in the portfolio. So one thing is for sure, you know how to select good companies. You will not fall prey to something wherein you can lose money. So that is clear. So it means you have good understanding of the companies, how to look at the fundamentals and all. And you have also selected majorly leaders in your portfolio, which is again a good strategy. The only suggestion that I would give in this portfolio is, you mentioned that you want to keep it at 30, you don't want to over diversify your portfolio. But according to my view, it is already over diversified, my friend, because 28 to 30 companies, it is like over diversified. If you don't want to go with a concentrated portfolio, you can go with 15 companies or maximum 18 companies. I think 15 companies is enough for a diversification. Beyond that, it is like over diversified in my opinion. Now coming on to my view on the concentrated and diversified portfolio, the major money or the big money you will always make in a concentrated portfolio only. But again, it depends on everybody's risk appetite. So it's a personal choice whether you want to go with a concentrated one or a diversified one. But again, see if you can bring it down to around 15 to 18, because right now, in my opinion, it looks over diversified. You can cut down on few IT companies if you want. Overall, it looks like a good portfolio. You have good understanding of the stock market. My last advice would be stay invested, keep increasing your capital, because the more capital you invest, the more return you'll get. So that's it in this video. We'll meet in the next video with some other information. Till then, bye bye.